We'll be starting just in just one moment. Okay. Welcome back to Daylight. Let me just get the screen resized here, and we will get going. We have an interesting topic tonight, which is should I pay my rent and mortgage in light of the economic circumstances that we are facing. For those of you who don't know, I'm Aaron Day. This is our 8th video. Today is Monday, March 30th, and I started this for the purpose of sharing every day a single tip that can help people to not only survive through the difficult times that we're in, but actually to thrive, to personally transform through this painful experience and come out the other end better. And I'm sharing some of my own personal experience over the past year or so. I've been 100% focused on myself before this crisis, and so I want to kind of share some of the knowledge that I gained doing this, because it's actually a really good time now that we're forced to not be, if we're deemed non-essential by the government, we're actually forced to spend time at home. And so this gives us a time to actually reflect and to maybe focus on some things in our personal life that we've neglected for a number of years. And so from that perspective, it's actually an opportunity. And if you look at it as an opportunity, and if you treat the time accordingly, you can come out of this a better person. And so tonight I want to talk about this question of, should I pay my rent or mortgage? Because this is a real hot button issue now in light of the bailouts, in light of the fact that some people aren't able to work because of action by the government, and in light of the fact that it's still going to be at least 3 weeks before people receive any kind of bailout check from the government. So I'm going to give a little bit of historical perspective on this and walk through some points. I do want to point out up front, though, I'm not, in doing this, I want to suggest practical advice that you can do as an individual. I'm not going to get into voting as an option here. The one thing that I've really learned, I've spent a lot of time in politics and as an activist. I've run for U.S. Senate, I've run for governor, I've run a number of political organizations, nonprofits, and everything else. And if I would say one thing, it's, the government is a reflection of who we are. And so as Gandhi said, if you want to change the world, first start with yourself. So I'm not going to make this a big issue around talking about politics and candidates. And just to give you one simple point, we just passed a $2 trillion spending bill on a voice vote, and the lone rep who wanted to actually have a vote, a roll call vote, was ridiculed by both the President of the United States and one of the top ranking Democrats, John Kerry. And so this is the state of our political discourse. There's nothing we're going to be able to do, in my opinion, to influence any of the votes as we go through this crisis. So again, the focus is going to be on what can we do as individuals to improve our lives. And then if enough of us do that, then maybe we will come up with different systems and means of organization after the fact. I want to recap on a couple of the other daylights. I'm not going to go through all 7 of them, but I'm going to keep these more thematic. And I'm going to discuss the 2 daylights and tips that are kind of related to this idea of finance. The very first video I did, I suggested that you pull as much cash as you can out of the banks. And this is for a variety of reasons. I think there's genuinely concern about liquidity. I think that this is part of why the government has been pumping trillions of dollars into the system. In fact, the government started pumping money into the banking system in September of last year. There was already a crisis long before coronavirus and people didn't know about it. And so banks were actually unwilling to lend to one another, which is something that they typically do on a nightly basis. If somebody's holding on to treasuries, somebody else has cash, they'll often do these short-term loans. And that market has come to a standstill going back as early as September of last year. But at this point, interest rates are near zero. The Federal Reserve has said they're willing to print an infinite amount of money. But if you really think about it, when you have your money in the bank, is it really yours? When you go to a bank, you have ATM withdrawal limits. There really is only so much you can pull out. And if you actually ever read the terms and conditions of your banking contract, they can end your account for no reason. So I just suggested that as the very first tip when I did the first video, just as a matter of a precaution for safety. But to further that point, this is a news story today from Zero Hedge. The banks are actually suggesting and trying to discourage companies from drawing down on their loans. So they've made these huge corporate loans during this big run-up in this economy, and now they're asking their clients to not draw down on those loans, which to me signals that there's an actual liquidity crisis or amount of money on hand crisis. And so all the more reason to hold your own money if you can. The second daylight that I did discussed cryptocurrency a little bit. And I don't want to make this a complicated discussion about cryptocurrency, but what I do want to show is for people that aren't familiar with cryptocurrency, it really is an interesting and, in my opinion, superior alternative to the US dollar, to these fiat currencies. Because as we've seen just in the past couple of weeks, governments are printing trillions and trillions of dollars out of the air, backed by nothing. The currency isn't backed by gold, it isn't backed by silver. Literally, they're printing it from nothing. And if anything, I'd say the dollar's actually backed by your kids and grandkids' future labor, because they're the ones that are going to be paying off all of this mess when you look at all of the deficits and so forth. Crypto has lower transaction costs. In fact, you can do micro transactions at a fraction or a hundredth or a thousandth of a penny, which is something you just can't do using the dollar. You can't spread disease through cryptocurrency. As it turns out, paper currency is one of the leading causes. It's been a vector for spreading the flu. It's also a vector for spreading coronavirus. And so that was my second tip. And in fact, if you want, crypto has gotten so easy that if you know how to send and receive a text message, you can send and receive cryptocurrency. So if you want, probably 50 people have done this so far, send me a direct message with your mobile number and I will literally text you some crypto so that you can see what it's like. Because I know there are a lot of people that just have heard a lot about it but never experienced. And I think once you see how truly easy it is, and that literally you can just text money, you'll say, well, wait a minute, this is actually easier and better than these coins and paper that can be counterfeited and printed by bureaucrats at will. So that was the second daylight point. But today, I want to talk about the question of should you pay your rent and mortgage? And I guess I should give a disclaimer that I'm not a financial advisor. But based on past experience, I think you have to be a criminal or have some sort of interesting background to be a financial advisor based on the current state of the financial markets. But with that said, I'm not giving any financial advice. This isn't a business. I'm doing this just to share information. But before we go into whether or not you should pay rent or mortgage, I want to talk and review quickly the 2008 financial crisis, because that really plays into why we're in this situation now. The situation we're in right now, again, isn't necessarily because of coronavirus. It's we never fixed the financial markets from before, and the problem has gotten worse. You may recall we did $700 billion worth of bailouts in the 2008-2009 timeframe. Most of these related to mortgages, and I don't know what your personal experience is, certainly comment, but I know that the general sentiment and analysis shows that the banks got bailed out, the bankers received their bonuses, and there wasn't a hell of a lot of actual help provided to the actual mortgage holders themselves. So that's the background of where we are, kind of leading into this situation and this talk about rent and mortgage. And I had suggested in previous videos that you take a look at a couple of different books and movies. I'm going to play a few clips because I think they do an even better job than I can of describing what happened in the 2008 financial crisis. One book that was also a movie on HBO is called Too Big to fail, which goes into some detail about the bailout of the financial system. So I'm going to start by playing a short clip from that.
Of investment capital. She has to do this in English. Start with the homeowners.
Okay, here's how you explain it. Wall Street started bundling home loans together, mortgage-backed securities, and selling slices of those bundles to investors. And they were making big money. So they started pushing the lenders, saying, come on, we need more loans.
The lenders had already given loans to borrowers with good credit, so they go bottom feeding, they lower their criteria.
Before, you needed a credit score of 620 and a down payment of 20%. Now they'll settle for 500, no money down.
And the buyer, the regular guy on the street, assumes that the experts know what they're doing. He's saying to himself, if the bank's willing to loan me money, I must be able to afford it. So he reaches for the American dream. He buys that house.
The banks knew securities based on shitbag mortgages were risky.
You'll work on shitbag.
So to control their downside, the banks started buying a kind of insurance. If mortgages default, insurance company pays. Default swap. The banks insure their potential losses to move the risk off their books so they can invest more, make more money.
Well, a lot of companies insured this stuff. One was dumb enough to take on an almost unbelievable amount of risk.
AIG.
And you'll work on dumb.
And when they ask me why they did that?
Fees.
Hundreds of millions in fees.
Yeah, and she figured the housing market would just keep going up. But then the unexpected happens.
Housing prices go down.
Poor bastard who bought his dream house, the teaser rate on his mortgage runs out, his payments go up, he defaults.
Mortgage-backed securities tank. AIG has to pay off the swaps. All of them. All over the world. At the same time.
AIG can't pay. AIG goes under. Every bank they insure books massive losses on the same day. And then they all go under. It all comes down.
The whole financial system? And what do I say when they ask me why it wasn't regulated?
No one wanted it. They were making too much money.
So that's a pretty good summary of what the crisis was all about. There's another great movie called The Big Short. And in fact, I tried to do a Zoom, group Zoom watch party for The Big Short last week, but apparently the internet bandwidth has been reduced to the point where that's not that feasible. But I highly recommend you check out this movie, The Big Short. And I'm going to show a clip from this movie because this really goes into the question, okay, in that previous clip we learned why we had the mortgage crisis. In this snippet that I'm going to play, this really answers the question of, well, what were the repercussions to the financial institutions and banks that caused the problem? So let me play a short clip on that.
Mark.
Paulson and Bernanke just left the White House. There's going to be a bailout.
Well, they had to. Right? Bring paper markets would
They
collapse.
knew.
Cash would stop coming out of ATMs. They had to backstop this.
They knew the taxpayers would bail them out. They weren't being stupid. They just didn't care.
Yeah, because they're fucking crooks. But at least we're going to see some of them go to jail. Right? I mean, they're going to have to break up the banks. Like the party's over.
I don't know. I have a feeling that in a few years, people are going to be doing what they always do when the economy tanks. They would be blaming immigrants and poor people.
But Mark was wrong. In the years that followed, hundreds of bankers and rating agencies executives went to jail. The SEC was completely overhauled, and Congress had no choice but to break up the big banks and regulate the mortgage and derivatives industries. Just kidding. Banks took the money the American people gave them and they used it to pay themselves huge bonuses and lobby the Congress to kill big reform. And then they blamed immigrants and poor people. And this time, even teachers. And when all was said and done, only one single banker went to jail. This poor schmuck, Kareem Sarah Geldin from Credit Suisse. He hit a few billion in mortgage bond losses, something most of the big banks did on a good day during the crisis.
So there you have it. I think that's a very accurate summary. One guy went to jail, but beyond that, the bonuses got paid out and the bad behavior actually continued. Another recommendation is there's a show called Dirty Money on Netflix, and they have an episode about Wells Fargo that talks about the incredible amount of fraud and abuse regarding mortgages and their entire sales practice. And this was or maybe still is the largest bank in the United States. So this has been an ongoing problem that wasn't solved at all, despite $700 billion being pumped into the system. But this leads to the next question. So will we return to normal, right? We've had this big boom period in the economy. The bailouts must have worked. The reality is the bailouts haven't worked at all. And if you've been following me on Facebook or Twitter for a long time, I've been warning people that we're going to be in a financial collapse anyway, regardless of whether or not coronavirus happened. In fact, I figured it would happen this fall. This is why this chart shows you the situation that we were in. This is before coronavirus. So you can see what we were looking at in terms of household financial assets relative to disposable income during the dot-com period, then during the housing bubble, and then now where we are now. So we have right now what I'll call the everything bubble. Government debt, corporate debt, personal debt, student loans, auto loans, municipal debt, every category of debt you can imagine is at an all-time high. So this financial crisis that we're in, even if we didn't have coronavirus, is like the dot-com plus the housing bubble meets the Great Depression. And this is essentially what happened after the last bailout. So as you can see, we didn't learn anything, and in fact, we created the next bubble. We sowed the seed of our own destruction. This next chart actually does keep me up at night. This shows, I think Deutsche Bank is going to be the Lehman Brothers of this collapse, except even worse. And what you see here is the interconnection of Deutsche Bank and a whole bunch of other huge global banks, China, the United States, Europe, and then you see the gray lines, that's all the interconnections between them. This one bank, Deutsche Bank, has $48 trillion of risk in the derivatives market. And the derivatives are those bets, those financial instruments that banks would have with one another, betting on how the housing market would perform. So this one bank has $48 trillion worth of exposure, and they have been performing incredibly poorly. In fact, their stock was already lower than it was at the bottom of the last financial crisis before all of this happened. And so if something happens to Deutsche Bank, we're in trouble. Well, just last night, the finance director for Germany killed himself because of, at least what was listed in the story, his concerns regarding the financial collapse related to coronavirus. And so this is still on the horizon. So the banks haven't learned, and in fact, they're still writing subprime mortgages. They're still using the same financial instruments that caused the last collapse, and that's just mortgages. And as I outlined, we have all of these other categories of risk. So then we can move to the $2 trillion stimulus bill that was just passed. Hold on a second. Churchill, calm down. The $2 trillion that was just passed. And so, as you can see here, the one-time checks. So the taxpayers are going to get $290 billion. The rest of that is going to large businesses, local government. It's going to a whole variety of other deals. So out of over $2 trillion, only a little over 10% of that is actually going back to the taxpayers. But the hospitals are getting a $100 billion bailout. And the airlines are getting a $58 billion bailout. So here we go again. And my point in bringing this up is we're repeating the same behavior. We're bailing out the same bad actors, and we're doing it in the same way. The net effect is this is actually a shift. It's a shift of wealth from the 99% to the 1%. And I'm saying this as a free market capitalist. This is the absolute peak of cronyism and corruption that we're seeing with these bailouts and with the financial market. And I just mentioned the $2 trillion stimulus bill. That's only the tip of the iceberg. The Federal Reserve has pumped trillions of dollars in as well. They lowered the interest rates to zero. They did $700 billion in quantitative easing, meaning buying treasuries and mortgage-backed securities from banks so that the banks could have money in the system. Then they decided $700 billion is not enough. We literally will have no limits to the amount of stuff we'll buy. Now they're buying bonds, and there's even speculation that the Federal Reserve is going to start buying stock, which technically is illegal, but they figured out a scam way around this. And so this really highlights a concept called moral hazard, which is we are essentially privatizing the gains and socializing the losses. Heads, the banks win, tails, you lose. And we're doing this on an even grander scale than we did in 2008. And to make matters worse, I mean, everybody's throwing around this 2 trillion number. Remember, it was 700 billion last time. They passed 2 trillion. But between all of the activities of the Federal Reserve and what's been passed in Congress, there's an estimate that the total bailout size is between 10 and 14 trillion dollars, based on the conversations that have been going on with Wall Street and the White House. So this is a serious problem, and this only leads to one thing. I mean, this has been tried before. I recommend you check out a movie called The Forecaster by Martin Armstrong, where he's analyzed currencies and the debasement of currency going back to ancient civilizations. It's not like the idea of debasing your currency to pay for pensions and to, basically fund social programs. It's not like that's a new idea. That's been going on since the first coins were printed. So this right here is a $100 trillion bill that Zimbabwe printed up when they went through hyperinflation. And at this point, when you're talking about $10 to $14 trillion worth of bailouts, that's really the direction that we're heading. For more information on these financial disasters in general, I also recommend a resource, the Great Courses Plus. It's a subscription service you can pay for. They have a really interesting class on crashes and crises, lessons from a history of financial disasters. So this covers everything from tulip mania to savings and loans, even to cryptocurrency scams. I found this to be really enlightening. And when I look at this stuff, when I analyze the markets and when I look at these types of problems, I like to look at a longer term historical perspective. Most people just will look at, well, this is what the financial markets have done in the United States since World War II, but that's really a naive, kind of narrow slice of what's going on here. So back to the question of should I pay my rent or mortgage? And this is now a really hot button topic. So there are 2 articles that are out just today where this top article was put out by the Associated Press, and I think it was in USA Today. Are you ready for a rent strike? The idea is gaining steam during the coronavirus crisis. And then there's another article from, I think this one was USA Today. We are out of options. Chicago tenants are refusing to pay April rent. So this is actually catching on. There's an actual hashtag rent strike is something that's already on Twitter. This is a movement that is gaining steam. And in fact, some other stories from the past few days, you might have seen this. The Cheesecake Factory told their landlords across the country they're unable to pay their April rent. Because obviously, if retail has been shut down, if you think about it from the perspective of a mall owner, well, if the tenants aren't in business, how are the tenants going to be able to pay their rent? That didn't stop President Trump's son-in-law, Jared Kushner, from demanding rent payments while simultaneously lining up for bailout money. And I keep on harping on this point, again, as a free market capitalist, but there is something that really bothers me about this, because I know a lot of people they're honest people. They work hard, and just as I was brought up, they were taught, you always pay your bills, and that's the right thing to do. And they're really getting fleeced by this, because they're paying their bills. They're paying, even with good credit scores, north of 20% interest on credit card debt. Meanwhile, the banks are getting bailed out, have been getting bailed out before this financial crisis, are making billions on fees, coming up with all these financial instruments and lining up for bailouts. And so the question is, well, what is the solution? Because we clearly can't vote these people out. They're passing $2 trillion bills without even calculating the votes, doing it on a voice vote. So, from my perspective, one of the best things you can do from an activism perspective is vote with your feet, pull your money out. That's why I pulled my money out of the stock market long before the collapse. I pulled my money out of the bank. I don't have anything in the system. And there's a real interesting moral question of, well, how are we going to change the behavior of these banks, because they'll do it again and again and again, and they'll just print more and more money. And so for people that are on fixed incomes, for senior citizens, this is just destroying their savings, all so that they can have essentially no accountability and continue to earn these outrageous fees. And so again, not financial advice, but I look at it this way. And as I've been giving these tips, one of the things that I've said is I'm only providing tips for things that I've actually done. So this is how I look at this problem. And from my perspective, the first is, well, who holds the mortgage, or who's your landlord? I mean, is it one of these big bailed out banks that, Bank of America just came out today and said, well, they're willing to allow people to not pay their mortgage for 3 months, but then they'll owe it all back at the end of that 3-month period of time. So who owns the mortgage, or is it a landlord who just happens to have an extra property and he's putting up all the risks? So that's a big question that I would look at. The next question is, have you lost your employment because of government action? If you own a business, or if your job has been taken away because of the government, then that would actually factor into the decision as well. Because if the government is bailing out the banks, but not bailing you out, the truth of the matter is a $1,200 check isn't going to do a lot of people a lot of good 3 weeks from now. In fact, $1,200 3 weeks from now isn't going to help you make an April the 1st mortgage payment or rent payment. And as we know from the stats, most people do live paycheck to paycheck. So that's the second criteria. And then the third is, what is your near-term prospects? But with that said, from my perspective, my current living situation, it's not a big bank that owns the property. So in my personal situation, even based on these criteria, I'm going to continue to pay unless some of these dynamics change. But I do think that this is an interesting way to look at it, and just food for thought when considering what you're going to do and what's moral and what's ethical, because that really is the deciding point. Because I get frustrated seeing people that work hard basically become debt slaves. And they're debt slaves to people that are abusing the system and that have been abusing the system for decades. And from that perspective, I think maybe an interesting piece of activism is to just withhold payments. And if there's enough movement on that, taking your money out of the bank is one statement. But if people start, not making their mortgage payments, that will send a very strong signal to the banking system. Because as you may or may not be aware, that the banking system is a fractional reserve system. So they only have 1/10 of the amount on deposit. In fact, they don't even have that now. The Fed waived that. But in essence, it doesn't take a lot of action to change the financial situation and the position of the bank. So those are just some criteria I thought I'd throw out there for discussion, and would love to hear your feedback in the comments. And with that said, if you've just joined the Facebook group, we just started a Facebook group, Daylight Facebook group, a few days ago. We already have almost 650 members, which is great. I really look forward to sharing this kind of information. And also, I'm going to host an online Zoom interactive thing where we can all just have a chat, because I use these tools, and most of the time if you see me, you just see memes. But the reality is the memes are that's not really the bulk of my personality. Usually if I'm having one-on-one conversations with people, it's going to be something like this. And I'd like to figure out a way, as we're all kind of decentralizing, figure out if there's a way to increase the interactivity and start having more constructive conversations that can be helpful. So with that said, I hope you have a good evening, and we'll be back tomorrow with another Daylight at 9 p.m. Eastern Time.